live. I'm actually going live now. So let's do that. I better not hear now. And I deemed myself completely on the last one. So this is probably going to be live as I'm speaking. But okay, I think we're live now. So
Okay,
good morning, everyone, or rather, good afternoon, everyone. This is Blackhead coming to you live from Cape Town and Pretoria today. So this is the first podcast that I've done that is live entirely from South Africa. Today I've got a special guest on, as could be expected. You know, Rocco Strydom, who is the founder of AMS Trader. I've been following his posts on LinkedIn for quite a while. We've interacted a bit. I find his views very insightful and very useful, to my own trading. And I have had nothing but positive feedback. So, Rocco, a warm welcome to you. I mean, it's a pleasure to have you on.
thank
And
you so
I think,
much. And
yeah,
so
yeah.
thank you so much, and to your listeners as well. A hearty hello. And I feel obliged to say, may the fourth be with you. I saw someone this morning flashing a Star Trek sign, and I thought, OMG, just kill me now.
Yeah, that's definitely not exactly what I would go for, but I did, funny enough, see the Star Wars convention, snippets of a Star Wars convention many years ago, where a guy deliberately went as Spock, and he did the whole Spock handshake thing.
Oh
And
man,
he got a lot of hatred. Let's put it that way. And I think,
that's an
even
epic troll.
yes,
An epic
exactly.
troll.
But even if, speaking of a lot of hatred, even the world of
Yes.
trading gets a lot of hatred. A heck of a lot of hatred from, as one of my mentors would call non-traders, civilians, for lack of a better word. Without trying to offend anyone. And I would like to get your input on this, but before I do, I would like to add this. I think that if you're a trader, you can't be 100% normal. There's got to be something slightly mental about you, ever so slightly, to be willing to do this and to be willing to go through this. Um, that's my perspective, at least. And if you disagree, please tell me, because I welcome any different perspectives on this topic.
Yeah, that's quite a loaded question. First of all, I don't think it's possible to say something these days and not offend someone,
Oh
at
yeah,
least.
well,
So
yeah,
let's go out
yeah.
of the stance that we've already offended the whole of Cape Town and now possibly going to offend the whole
The
Pretoria,
whole of the
and
world.
then let's go international with it. So trading, there's a
Yeah,
stigma. So trading,
yeah.
yeah.
No. All I'm saying is, I think if we had a conversation, Rocco, just opening our mouths and thinking will offend people. So I think we're way past that
Yeah,
stage
that's
now. In any
also why
case.
I like this format that you're doing, because if it's video, there's so much attention being given to how is this person looking, where is he, instead of
Mm,
just purely the conversation that's being had, which I feel like giving the rise of platforms like Clubhouse and Twitter Spaces and now Facebook coming online with their own offering. Audio is such an important medium. I mean, it's harking back to radio, where people would
mm.
listen, like honestly just sit and listen. And I find the visual medium to be very distracting. So kudos for that.
Yeah.
I think let me use it as departure point, where I say that I make a statement and I'm going to say trading is misunderstood, and therefore there's a stigma born out of it. The stigma largely
Mm,
comes from, I believe, the social media generation, your Reddit, Instagram,
mm,
TikTok followers, and those likes. People wanting to double their profits overnight. They want to basically use leverage and get rich quick, right? Buy a Lambo.
mm,
That's a goal of
mm.
the. That's what's basically,
Oh,
yeah, I mean,
Lambo.
but that's what's being sold to you, right? It's if
Mm-hmm.
you follow me and you do this and you do that, then that will happen. And I mean, me and you, we know that's not the case. And like I said, it's the easy versus the hard sell. The hard sell is
Yeah.
telling you like there's an educational aspect that you need to understand the fundamentals, being it fundamental analysis or technical analysis, but you need to at least spend a lot of time learning and then building screen time. And then even then, you're not going to become a millionaire overnight, right? It's like any other occupation. So that, but people don't want to
Yeah,
hear that.
sure.
They just follow these guys on. I mean, I watch it all. These guys on TikTok with millions and millions of followers, and I think, and then that's where the hatred comes in, right? Because then
Mm.
you talk about normal people, right? So I'll just call them people, and they come up to you and
Mm.
they want to start talk trading, and then the first thing they say, oh, like Bitcoin. And automatically my
Yeah.
mind goes, oh, yeah, well, here we go, because that's your frame of reference. You only have one frame of reference. You remember that company MTI, that pyramid scheme it was about a
Yeah,
couple of
with
months ago.
the scam, the Ponzi scheme, pretty much.
Mm.
Yeah, that
So
big
people would
Ponzi
come
scheme. How
to,
much did they
yeah,
take people
so
for? Was it 4 billion?
no, it's a lot. No, yeah, well, I
Yeah,
can't
it's huge.
remember, but people would update their profiles after investing in MTI and now say they are traders, which I found laughable.
Oh gosh.
And yeah,
Yeah.
exactly. And I mean, or they would open an IQ option account and now say, listen, I'm a trader. And when they actually come and sit next to you, or they see what it like, look at real charts for the same for the first time, or they look at real fundamentals, then they sort of, I wouldn't say they become scared, but I can't put this. It's an overload of information onto their system.
They're out of their
Sort
depth,
of,
which you said
yeah,
that they're out of
basically.
their
So
depth in a way.
yes, well put. So they basically block it out and they dismiss what you are doing as
Of
something that
course.
they don't understand. And I think that's where the
Mm-hmm.
stigma largely comes from, because it's much easier punting like $200 on Dogecoin or any other crypto and just saying, well, I hope I make a return, than actually trading the market yourself.
Oh yeah, big time. I mean, Dogecoin is, oh gosh, let's not even go there. I don't even know what to make of it. Be
So
extremely honest with you, it's just,
yeah, so education is something I'm very passionate about, but I'm very careful not to label myself as one thing, because people say, oh, you are a trader. That means that you need to drive a Porsche or a Ferrari, or you need to, they've got this expectation of lifestyle. And I'm like, no, not really. I'm
yeah.
sort of an average guy. And I'm like, oh, yeah, but are you not good? Like, what are you doing wrong or whatever? It's like, no, I'm still around and I've been around for a while. So if I'm obviously doing something right, but it's just your expectation is not aligned with the reality of what it is. And remember, trading is a vast field where it encompasses risk management, it encompasses analytics, chartists. I mean, it's such a big field that you can, fund managers, sorry to put that in there, that you can actually venture into if you understand the basics. But
Oh yeah.
people have got this reality in their mind that's basically put there by social media, and I can't blame them, right? Because from the outside
Mm-mm.
looking in,
Of course not.
meme culture is extremely powerful. um,
Oh yeah.
if you look at Reddit, we had GME
Mm.
and AMC and the Silver Squeeze and stuff like that, and people like saw that and say, "Oh yeah, if we all stand together, then we're all going to make money." You know, ape strong together. That was the big meme narrative at the start of the year. And then you
Collusion.
had people, yeah, and it was like the people who actually know what they're doing. It's like, yeah, good luck climbing in topside and waiting for the crash, you know. But not that we basically wish it upon people, but we
No, of
just sort
course
of
not.
know what's going to happen. And that's my problem with the stigma. and then bringing it towards the reality. It's the only way that you can bridge that divide, I believe. It's through education. And you touched on a very important aspect when you started. You said my mentor, one of my mentors, I can't remember now, but that's very
Yeah,
important. Is you need that person, sort of like a Sherpa,
yeah, yeah,
going
absolutely.
up a mountain, or whatever you want to call him. Like he's
Mm.
been there, he's done that. He's blown accounts. He's like tried all the strategies, whatever. Because he basically, I mean, he tells you, listen, don't do this or don't do that. You're essentially
And
only
I still
buying
talk to him.
time.
I still talk to him
Yeah.
on a daily basis, to be very honest with you. I
Mm.
mean, the guy's a very good friend of mine, and I still learn a lot from him. And he says he still learns a lot. And our relationship is of such a nature, to give you an idea, that we teach one another stuff. Because I think that's one of the importance of a student-mentor relationship, that it's not a case of you just sit down as a student and just open your mouth or open your ears and just swallow whatever comes your way. You adopt what's useful, you reject what is useless to you, and you add your own unique twist to it. I call it the Bruce Lee approach. Um, so that's why I agree with you. You need to get education. It's How can you expect to trek through a jungle or walk up a mountain if you don't know what the hell you are doing? So
Yeah.
so you wouldn't do it there. Why would you do it in trading or investing?
No, I had a podcast this morning where I basically said to someone that if you're a doctor, if you tell me tomorrow that I'm going to become a doctor in 2 or 3 months, I'm going to perform open heart surgery, everyone's going to laugh at you. So
Yeah.
why are we not doing it the same when someone's saying, I'm going full time into trading when he has like 2 or 3 months experience under your belt? Why are we not having the same sort of reaction? And that's becoming an issue because, I mean, everyone is saying, yeah, quit your day job and go and do this full time without knowing
Oh
exactly.
boy. Yeah.
Yeah, but I mean, that's where we're going. And I
Mm.
mean, and that's the problem that basically, look, I think it's a valuable skill to have, right? I think
Of course it
if
is.
you
Yeah.
are not, yeah, but I mean, that's not, I don't even think that's up for debate because if you can, uh, even if you can just have the elementary or the basic understanding of market structure, and you can take ownership of your own investments. You can, I mean, if you have a fund manager or like, or you have a pension fund or whatever, then you can at least start to ask him questions and say, well,
Mm.
cool, but why don't I have exposure to this stock, or why do I have so much exposure here? And like, okay, but why did you know what? And it's not telling him how to do his job, but I
Mm-mm.
feel it's empowering yourself to make better decisions.
I I fully agree with you, and you know, you speak of fund managers, and I'm not here to call anyone out on anything because hell, I get it wrong so bloody often. So that's why I'm not here to point fingers. But
Yes.
have you read a book by a guy called Daniel Kahneman called Thinking Fast and Slow?
It rings a bell. Might have been long ago, but it does ring a bell.
Okay, that's absolutely fine. If you haven't, then I highly recommend you do. And it's one of those books that I would recommend to anyone who wants to get into trading, investing, or anything related to do with money, or
Yes.
if you just want to learn more about yourself. So to give you a brief background, Daniel Kahneman worked with a guy called Amos Tversky. They were both Israeli scientists, Kahneman with a psychological background and Tversky with a mathematical one. And they were the pioneers in the world of behavioral heuristics. So
Hmm.
for people who want to know more about heuristics, that's sort of like risk management and behaviors, you know, how
Yes.
you handle your risk, how you handle yourself, what are your biases, and so on and so forth. It's very deep. We're not going to go delve into that now. But Kahneman, interestingly enough, I think this is after Tversky died. He went and he did the research by interviewing. I think it was a sample size, and I'm speaking on a correction over here. I think the sample size was 1,000 CFOs from Fortune 500 companies and even former CFOs. So it's a relatively large sample size. And the question
Hmm.
that they were asked was, how what do you see the market doing, or your company's stock doing over the next year, versus to what actually happened over the course of the year? What do you think the correlation was between successful predictions and what actually happened in the market, if you had to take a rough guess?
Well, it's a very low probability, because out of our mantra, or my mantra, is that you can't predict, you can only follow price.
Yeah,
So
yeah, exactly.
if I wanted to predict, then I'll probably come in at a confidence interval of something like 10% or 15%, if I'm lucky.
Less than zero. That was the
Yeah,
actual
well, I
result.
mean,
But what is that? But exactly. But that also shows one that if even these guys don't get it right, what are your odds of actually predicting the future? Literally
that's
less
correct.
than zero.
No, you
So
can't.
it's beyond arrogant to actually even think that you can predict the future. And Kahneman also went on and said that never underestimate, no matter how badly you want to try and rationalize or justify this, but never underestimate the element that luck has in your results in life. He said it's astounding to see what a big role luck can actually play.
Are we censored on YouTube? Are
Uh,
we? Okay, so I'm gonna, yeah, let's go. So essentially, it's all BS. That's one of the biggest things that I've realized. It's that if you try and rationalize it, then there is no rationale.
Yeah.
One of the best, or the most, the one of the things that have helped me the most, it's three fundamental questions. It's where, in which direction is price moving? How fast is it moving there? And where is it likely going to stop? If you can't answer those three questions, then you, if it's, even if it's an investment or it's a trade or whatever, you don't need, if you're missing one of those components, because you're following price. You're not predicting, you're following.
Yeah.
When price starts to move, you can only catch the middle part. Look, calling tops and bottoms is a mug's game. I've been on record as this, saying this, and then you'll get people saying, "Yeah, I can do it. I can do it." Yeah, you can do it, but the majority of people can't. So, what is best practice then? If 1 out of 10 can call tops and bottoms, I mean, okay. So, I don't want to talk about crypto really, but people have been calling the Bitcoin top since when? Oh, it stops. Oh, it stops. Oh, it stops. And I'm like, what now? Like, you're only making yourself a fool, really, to be quite honest.
Yeah.
If you call, because it's like, so one of the guys I really look up to is Simon Ree. You can follow him on LinkedIn.
Oh yeah, I've spoken to Simon a few times on LinkedIn.
It's a very wise man. Spent a lot of time in Goldman. So, I mean, he knows. So he says, like, do you want to be right, or do you want to make money?
You want to make money? Yeah, yeah.
And I feel like, and I feel like a lot of people, they want to be right the whole time instead.
It's the egotistical attachment.
Yeah, look, ego. Look at all those hedge funds that shorted GameStop. They wanted the stock to go to zero. They had all their positions full. They had everything that could just like execute and climb out of the profit, but it was the ego. So
absolutely,
it's sort of the number. Well, yeah, ego, I guess, is the number one. I would say the number one enemy of the trader.
I call it the
investor.
success inhibitor. I call it the success inhibitor, to be very honest. It's because most of my bad decisions have been based on ego, if not all of them.
If you get too comfortable, and you sort of, oh, I've got this figured out. I've got this out. Oh, it's going to do the X, Y, Z or whatever. Oh, yeah, I'm at the point where I don't need to use a stop loss. If you ever get to that point, then just look at what happened to Archegos. I think that's how you pronounce it. Archegos Capital. They lost $30 billion in 2 days. The family office, yes, but they had Credit Suisse, I think JP Morgan was involved there. There was a couple of big banks.
Yeah, Credit
And
Suisse. I think Nomura was involved too, if I recall
yeah,
correctly.
but
I
yeah,
think so.
so
Yeah.
no, but then I had a conversation with someone yesterday over lunch, and they said, "But how does that happen? Because whatever, whatever, whatever." And I'm like, "Oh, easy. Oh, very easy. It's like leverage, and if it's a couple of leveraged positions, I can blow 2 million in basically in a morning session if I want to.
Yep.
So 30 billion is US is nothing. It's about leveraging yourself so heavily, and then there's a term called martingaling, where basically martingaling is where you like take position on swings that you hope it's basically you recover, and when you are in the thick of things, right, it's very hard to see your way out.
Yeah.
Does that make no? But I mean, I'm trying to explain to someone.
I know. Oh, I know. That's why I just said, yeah.
And it's like you actually need someone to pull how can I put this? Like put your hand, put his hand or her hand. Let's not be sexistic. Um, on your shoulder and pull you away. You know what I mean? It's like take a breather. You're in it because it's like sort of these shields come down and you're in it. Like so that's how Archegos basically for me happened, is that you can do it for years and be profitable and you can look after your risk management and whatever, but they lost everything in 2 days.
You're
And
one trade away from being broke, as my mentor would
but
say.
I mean,
You're one bad
yeah,
trade away if you
no,
do
no.
stupid
Well, I
things.
mean, that's what stop losses are there for, is
Yeah, yeah.
protect your capital. But my question was, number one, where was the risk management? I think the case studies will come out. We'll see what happened. And anyways, they're already saying, "Oh, rogue traders," because it's always a rogue trader. You know what I mean? It's like always
Yeah.
there's one person. No, everyone knew exactly what they were doing. It's greed. I believe it's greed.
Of course it is. Big
Because
time.
my second question is, how much is enough? And I guess it like varies from person to person, but if I have 30 billion US dollars in a family office and I put everything on the line,
Who's the
what
idiot?
is my motivation if it's not greed? So yeah, that for me is just like ego and greed are the two like big ones. I like what you call it, inhibitor. I like it. I'm actually going to steal that from you.
Yeah, it's the success inhibitor because
Mm.
it makes you do stupid things. And yeah, sometimes it has its place. You need to have the balls, for lack of a better word, to take shots. But you
Yeah.
also need to know what you can handle, and more importantly, what you cannot handle. For instance, I do a martial art called jiu-jitsu. I haven't practiced in a while, but if I were to go back into a studio right now and just say, "Hey, all you black belts, I'm going to bust all of you up because I've done some training lately." Who's going to get his ass kicked?
No, you're
Me.
going to get rolled.
Me. Now, now,
Yeah.
now it's the same thing. If I just go to the market and I say, I've got $1 million account and I'm putting every single penny on the line, on one single trade. Who is the idiot here? It's me. It's just sheer ego that makes people do stupid things. And I think you need to have courage, but try and take the stupidity out of the equation if you can help it. Because even if you know of biases, and this is a scary thing as well, Rocco, that Daniel Kahneman also said, just because you're aware of the fact that just because you're aware of stupid things that you do, doesn't mean that you stop doing them. The only hope that you really have, is you do it less frequently, or that you can stop yourself before you do them. But it's incredibly easy to revert back to patterns that could actually screw you as opposed to serve you. And that's why I also think trading is a far more psychological game, because your biggest opponent's not the market, it's you.
Yeah,
It definitely is
it's
you.
90% mental and 10% technical. What people think, they always hunt for if I've got this indicator, then I'll make money. If I've got this, then I'll,
Oh, good.
they want the perfect system with the perfect charts or
The
the
Holy
perfect
Grail.
whatever. And yeah, and it's there. There isn't. It's 90% mental. So if you don't have your strategy, I mean, at best you need three. I would say like a trend strategy, I mean, reversal strategy, and I forgot the last one
And
because we haven't used
a
it.
balanced market
Yeah,
strategy, I
yeah,
would say.
thank you. Yeah. So if you got those three, and trading should be like, and investing for that matter should be boring because it's wash, rinse, repeat. It's there shouldn't be any euphoria
Uh,
or emotions, or literally the
no.
most boring thing. But you hear what I'm saying. It's like when you
Yeah,
have your
that's why I'm
risk
laughing.
managed, and you have your risk management that basically decides when for while entry, exit, capital at risk, all those things.
Mm.
And it's not, it's like people treat it as a casino, and it's not a casino. Um, so if you have those things, look, bias is something that even I struggle with, if I'm honest, because,
But we all have it. And the thing
oh,
is that
yeah.
I don't think we should try and eliminate it. If you take a long
Mm.
position or a short position, guess what? You've got a bias. You've got a long bias or you've got a short bias. Own
Yeah, but
it, but don't get
you
attached
get,
to it.
um, look, here's my problem. You get people that are perma bulls or perma bears, and that's my
Oh,
problem.
yeah.
And my problem is like, okay, cool, but I spoke to someone the other day. They said, "Oh, I'm so tired of this fake movement upward." And I'm like, I pause. I'm like, so you're insinuating that if the market, when the market goes down, it's a real movement, and when it goes up, it's a fake movement due to MMT and the Fed and whatever. But like,
Yeah.
okay, cool. So let me stop you here. If you know it's going up and it's manipulated, why don't you not profit from that?
Yes.
Because you've got
But yeah.
no, but
Yeah.
you've got recency bias of you like it when the market falls 10% and then you can only trade under those conditions. But when it
Hmm.
bounces, then you sort of, oh, this is BS, and oh, this is the Fed, and this
But
is
who are you to decide that? Who the hell are
yeah, but
you?
that's the thing. It's like you need to hang. I say hang your bull hat next to your bear hat, and look in the morning, look outside. Is it raining or is the sun shining? And then you decide what you go for, because you can't have a bias. If I'm like, especially like if you're trading intraday, I say more
Mm.
specifically, longer time frames maybe not that important, but um, if you sit there and say price needs to go down, price needs to go down because I say so,
Yeah.
that's a bias, and that's a very um, that's a very dangerous bias,
Oh
because
no, of course. Of
you
course.
are looking for positions or setups that are not there. But you
Hmm.
can't short momentum, even if you really want to. It's not a great idea. You might catch a little bit of a pullback, but then you're going to get wiped out. So biases
Yeah.
are actually very important. But like I said, it's not
Yeah,
to eliminate them because it's human nature. But
of
like,
course.
and I'm also not saying no. You need to have zero emotions, like no emotions. No, there's capital at risk.
No,
Obviously,
no,
there's
you're not a
emotions, but how
psychopath.
to? No, but I mean, if well, like I said the other day, if you've got too much emotion
Mm.
back to one position, then you're over leveraged. There's a reason why you're nervous. You're putting too
Yeah,
much
absolutely.
on one thing. And remember, we're dealing with
Yeah.
probabilities. It's a 70.
Hmm.
If you're talking on a 75% confidence interval, then there's a
Then one in
20.
four won't work out.
But also on that trade, there's a 25% chance, small chance that's going
Mm.
to turn against you. When it
Exactly.
shows, hey, this thing is turning against me, rather get out, and then you
Mm.
like, no, you stay because now it's going to work out. You know what I mean? So
How do you know? Exactly. How do you know? It's as you said, it's all based on probabilities, and that's what I also try to get across when anyone asks me, should I get into trading? Now, my honest answer is, for instance, now that we delve into the topic of, who should get into trading and who shouldn't, my first answer is, whenever anyone asks me, should I get into trading, is no, you probably shouldn't, because if you, because you more than likely have not yet done enough self-evaluation and market evaluation and all those things to see if you can really handle it. But if you do feel that it is a skill that you want to learn and that it is something that you eventually want to progress into, then I say do the work. But should you just quit your job and become a trader because Joe Soap has just made $100,000 off Bitcoin? No, absolutely not.
Well,
Absolutely not.
I was about to say, there are so many YouTube videos. So, because we know that you can watch a YouTube video and become an expert in anything, because that is how life
Oh
works.
gosh, yeah, yeah.
So,
Yeah, literally, and everyone
yeah,
is a
I mean,
genius in a bull market. A bull market is the easiest time in the world to make money.
yeah,
It's like,
just you put it
to
in,
give you
you leave it.
to give you an example, and I'm not going to
Yeah.
call out any names over here, but this just it actually. I'm going to sound like a real drama queen, and it's not
Okay.
intended to be as such, but it's just because I know what it takes to be a trader. I know
Yes.
how what a toll this takes on you. This profession claims a toll, and it's not just a financial one. Absolutely not just a financial one. You sacrifice time in terms of your relationships. You lose aspects of your sanity along the way, your self-confidence. You start to doubt yourself at times in ways that you never thought you would ever doubt
Mm,
yourself.
mm.
I mean, it takes a toll on your health if you don't watch out. It
And
does
well,
that.
let's keep it light and upbeat. I think people
Yeah.
are no
No, no,
joking.
no, 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 no,
No, it's
no.
true. Look,
No,
it's true. But
I say that you need to be aware of the dark sides if you want
oh
to be
yeah,
able to
oh yeah,
take
nice,
hold of the light side too. So that's
Nice Star
yeah,
Wars reference there.
absolutely, absolutely. But the reason is I'm not saying this to be negative, by the way.
Yeah.
I'm just saying be aware of the potential pitfalls before you commit to something. And boy, is it a commitment. It is a
Uh,
freaking commitment.
Yeah, if you
I've
don't
no,
know, yeah, well, I mean, there's a saying that if you don't know who you are, or if you don't know who you truly are, then trading will show you who you are. You
yes.
don't know who you are
Yeah.
until you have done at least. Look, I don't actively. I mean, you follow me on LinkedIn and
Yeah.
whatever. You will never see me actively going out trying to persuade anyone to go
Mm-mm.
and make it a profession or whatever. All I'm saying that is, if you are interested, at least what we do is a safe space to land where we can show you, like, without incurring too much costs and whatever, like, this is exactly how it works, and this is so that you can make up your own mind for yourself. Because, like I said, it can be a springboard into something else. You don't have to become like a day trader or a fund manager or whatever. You can. I still believe it's a valuable skill. One of the most valuable skills for me that screen time, and I'm a very big advocate of screen time, building up screen time. You know, like
Mm.
our pilots build hours.
Yeah,
You need to, I
absolutely.
mean, the market only has so many moves. So if you spend enough screen time, not saying 24 hours a day, but spaced out 2 hours a day, spaced out on 6 months or a year, and you build the screen time like that, a pilot isn't going to go and fly the whole week. You know what I mean? As you start to see the movements, pattern recognition is
Yeah,
extremely useful skill in everyday life,
yeah,
because you
yeah.
start to see the patterns in life as well. Oh, this
Mm.
what person is behaving in such and such a way. Why is he always doing this? Oh, okay.
Mm.
And then you can sort of try not predict, but follow their movement. So that's a cool
Yeah,
transcending.
yeah. You can anticipate it, so to
Yeah.
speak.
So it's
Yeah.
a cool transcending skill from
Mm.
trading, whereas you learn pattern recognition and you basically see it in life and events. Oh, because trading is, if we close resistance here, then this is possible. Oh, if we don't close support here, we're in big problems. You know what I mean? So in life, it's the same. If this happens, then that is likely to happen or could happen.
It's like an algo in a way, similar
Yeah, well, I mean,
to an algo.
it's
It's conditional
yeah,
probability, essentially speaking.
yeah, I would agree. And there's no way to automate it. You can't automate life. I'm very sorry.
No, no, no,
There's
no.
too
Of
many
course not. Of course
variables.
not. No, definitely agree. I'm just saying that the process that you described is like a
Oh
conditional
yeah.
probability. But if you had to go and try and automate that, you would be coding until you have a beard as long as as tall as Table Mountain itself. Because there are too many contingencies. And I'm a big fan of a guy called Nassim Taleb, who wrote books
Mm.
such as The
Oh
Black Swan,
yeah, he's the
Anti-Fragile.
goat.
Anti-Fragile is probably the most important book that I've read in my entire life. It literally shifted my mind and my thinking in ways that nothing else has ever been able to. And I recently read another one of his called Skin in the Game, and currently busy with A Black Swan.
Yeah,
And I'm
Taleb
not
is a
saying
goat.
yeah, I'm not saying Taleb is a perfect human being, far from it. I mean, he has his own flaws, just like everyone else, and there are even flaws in some of his thinking. But what I do fully agree with Taleb is that we are at best horrifically bad at predicting the future, even though we rely on so-called experts to tell us what's going to happen in the future. Go freaking figure.
Yeah.
It's like humanity has sort of a messiah's complex in a way. We need someone to come and show us the way. Oh, whether it's the Fed,
Um,
or whether it's a
yeah.
politician, or whether it's some economist, or whoever. Someone needs to show the way. And I'm not saying experts don't have a place. Of course they have a place, but please just be aware that they get it wrong too, and more often than you think. That they're also just fallible human beings like the rest of us.
So
So, so, so sorry, go ahead, Rocco.
one of the things that I appreciate from Taleb is his open-mindedness. It's something that
Mm.
I've started to practice this year. One of the principles, we're throwing a lot of names, but the teachings of Ray Dalio. Also, Ray Dalio has his
Oh,
own
raise
problems, and
big time,
yeah.
yeah.
So, but if he puts out weekly teachings and he talks about radical honesty, and radical
Hmm.
honesty for me is so important because, bringing back to Taleb, the open-mindedness to change your opinion or to change what you believe. He started and saying, okay, I believe in Bitcoin, whatever. He recently said, no, he doesn't anymore. That's something that I value immensely. It's not saying, because nothing teaches you that you are wrong as quickly as the markets do.
No.
If if you can think you're right and you'll be in a position and the markets will show you, no, sorry, it's actually this way. So being radically open-minded is extremely important, and that's why.
Oh yeah, absolutely. Yeah,
And that's
exactly. To build onto your point, Dalio said he started asking himself, the quote unquote, he said, instead of saying I'm right, I started asking myself, how do I know I'm right?
yeah, but I
Gosh,
mean, yeah. So
what a mind-blowing concept. How do I know I'm right?
yeah, but
Jeez, how many people would ask
problem.
that?
That's the problem. Yeah, well, okay. So two things. The problem is history. If history teaches us one thing, it's that it teaches us nothing. So we
Yeah.
don't learn from the past and what happened. And then you've got this, like you said, the rise of the influencer. We want
Mm.
to be led. We want to be influenced by people, and instead of following the quote unquote right people, then we follow the wrong people. And that's where this whole narrative is getting a bit scary, because we can talk. I mean, if you can you imagine you tell a 12-year-old or 13-year-old, Taleb or Dalio, or I'm starting to think of someone else now, but they'll
Kahneman, for
go,
instance. Yeah,
no,
yeah.
yeah, they'll go, huh? Like what?
I've spoken to many people. Rocco, it's funny you mentioned that. Sorry to interrupt you there, my
no,
friend,
no,
but
that's fine.
just while I have the point on my top of my mind, you'll be
Mm.
shocked to know how many people I've spoken to who have PhDs or masters, and they've never even heard of these guys before. Then we're talking folks who have masters in economics or psychology or any finance-related fields. Like, wait, whoa. You mean to tell me that you don't have any knowledge of who Nassim Taleb, who Ray
Yeah.
Dalio, who Kahneman, or any of these folks are? Get the F out of here. I mean,
Mm.
honestly, It's like, how can you even how can you say you're educated if you don't even know who these people are? It's ridiculous.
Yeah,
Sorry if
but
I,
it's
well, actually,
no,
sorry, not
you're
sorry.
right, but
Sorry,
it's
not
this
sorry.
sorry, not sorry. It's
Yeah.
this rise of ignorance. And well, someone asked me yesterday, how do I build a crypto portfolio? Okay, that was the
Mm.
question. And my answer was you don't. Simple, because I'm first of all, I don't have a license to give you financial advice. Secondly, I don't want to. So my answer was
You and me
bluntly
both.
no. So my answer was bluntly no. But I mean, that's the rise of ignorance uh, through influences and misinformation and stuff like that. And it's very hard, like to basically compel some or to try and argue against it. If you see the rise of crypto and altcoins and what's the like tokens and stuff like that, and
Yeah, yeah, yeah.
the returns are eye watering, right?
Hmm.
And it's like so then it becomes really hard to argue against it. And I don't really like, I think I'm coming back full circle where you said, how do you talk to quote unquote normal people? And my answer is that you don't. Because
Mm.
I can't in good conscience in 5 or 10 minutes lay bare the whole like industry and everything to a point where you can understand. I find it easier these days to speak on the level of a smart toddler. Like if like imagine someone is 3, 4, or 5 years old and is quite clever, speak to him
Yeah,
in
yeah.
that sort of tone, because trying to educate someone as well and you're speaking over their heads is also counterproductive.
No, you're being a bad teacher by doing that, essentially. So
Well,
it's
yeah, it's well, it is what it is. It's a very interesting landscape that we find ourselves
oh
in.
yeah, yeah. No, no, no. Sorry. How I meant it is that if you deliberately try and speak over their heads to sound smarter than what you are, then you're
Yes.
not doing a great job. It's
No,
it,
no, it's sorry, you were saying.
no, 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 no. Sorry, there was just a bit of a lag. No, I was just saying it's
Oh,
like
okay.
this movie. It's like this movie called The Big Short, with
Yeah,
Michael
one of
with
my favorite movies of all time. I wonder
absolute.
why they haven't. Like, I'm sure Netflix bought a lot of rights now. Okay, guys, GMC, sorry, AMC, GameStop, and all those. There will
Mm.
be like series and stuff coming out. But really, the source material is very interesting. So I reckon we'll see some more like content being produced around that.
Oh, absolutely. Absolutely, but even The Big Short, when the movie started, and I couldn't help but memorize what this guy said. Ryan Gosling was the narrator of the movie. For those who don't remember or who haven't watched it yet, where he said that two key things that you need to know about Wall Street and why we use jargon. One, to make it seem that only we can do these jobs and that you are completely incapable. And two, to get
Mm-hmm.
you to leave us the F alone. And I think number two is more often than not one of the reasons why jargon is being used. And I speak as someone, who has been trading for a number of years. I don't claim to know everything. Far from it. There are things that you could probably run circles around me in terms of what you know that I still need to learn. But I have definitely noticed before that many guys in this field love to use arbitrary jargon just to
Yes.
sound smarter than what they actually are. It's like so you ask them, oh, so what's your strategy? Well, I use a CDS to create a CVB and an IHU and an IOU. And it's like, okay, can you just tell me what the IOU and the CDS and so on? Okay, it's a credit default swap and then mortgage back.
Yeah.
Okay, well, I know what those are, but you didn't tell me what the freaking abbreviations meant. And I swear to God, there are guys who deliberately use those abbreviations just to sound as if they are the big shots. And when they just unabbreviate them, it's like, oh, well, Now you don't sound
Well,
as smart as you used to.
the thing is, there's a brilliant source for people listening, or if you ever want to know, it's like I call it the Wikipedia for trading. It's Investopedia.
Oh yeah,
Um,
fantastic.
I love Investopedia. It's my what if I
I
well
use
when
it.
I yeah, but what I mean is when I send people or like they ask me for a source, I said, oh, well, that's the only one because it's in my opinion, peer reviewed. I found everything on there to be factual and accurate, and
Mm.
they give you both sides. They give you, oh, but this is the positives and the negatives and whatever. And if someone talks over your head, then you can go and take notes and you
And
can
it's
go and look it up.
understandable.
Yeah, it's
It's so
written at a level.
understandable.
Exactly. So Investopedia, for those of you that are wondering, you can go and look, and it's very resourceful and very useful.
No, absolutely. And I've personally found, Rocco, I don't know from your personal experience, but from
Mhm.
my experience, I found that the best guys in this game, I'm very privileged to know certain people that I do. I'll be extremely honest that a lot of what I learned along the way has not been due to material that I studied, but from people that I was able to get to know. You know,
Oh,
and
that's
and
brilliant. I mean,
and,
that's something to be proud of, actually.
yeah, and one of my very good friends is a guy called Beat Nussbaumer. He's been trading for as long as I've been alive, to give you a rough idea. You know,
Okay.
I, I, I mean, that is actually quite a scary concept in a way. He's literally been trading for as long as I've been alive. But Beat knows more about macroeconomics and just the macroeconomic world, especially in FX, than pretty much
Mhm.
anyone I've ever come across. But he's so humble about it, so chilled. He doesn't try to confuse you. He doesn't try to sound smarter than what he is, or look at me, I'm so great, I'm so wonderful. He's really, really chilled about it. Another guy, and I mention these guys by name because it's also my way of showing gratitude to them for the things that I learned. Chris Sidiel, he's a 28 or 29-year-old arbitrage hedge fund manager from New York. This guy knows more about options trading and volatility than pretty much anyone I know. And the stuff that he has already forgotten is what I still
Yeah.
need to learn about the field. But
But
also
that's
super
yeah.
humble guy. I mean, he doesn't try to use arbitrary language to confuse you or anything. And if you don't know something, you can happily ask him and he'll explain to you without like, oh, you don't know what that means? Oh, really? He doesn't do stuff like that. And these
But
are the people that I appreciate. Sorry, go ahead, Rocco.
no, I think it's important that you name them by name, and so that people can go and look for them, because these guys are a dime a dozen. A dime a dozen,
Yeah.
and really they are in short supply. And um, so it's very good when you pick up on those names and you go follow, especially if they put out content on a regular basis, even better,
Yeah, Chris
because
is on
then you
Twitter, for
can,
instance. Yeah.
yeah, you can feed off of their information and basically what they've learned in that way, because there is no university for trading. There is
Mm-mm.
no like certificate, and that's one of the things, like there's no degree or whatever you want to call it.
This is a
People
lesson
want
you have
to,
to live. You can't learn it. You
yeah.
have to
So
live
if
it.
people want to
That's
be
where I put it.
books, so people who are book smart, they want to go and say, "Oh, just give me the manual." Right. So
Mm-hmm.
who wrote the manual for the COVID correction? What chapter? Where were we? You know what I mean? It's like chapter, and like no, that you won't find that in a book. It just should happen. Sorry, it happened. So yeah, but I mean, those people have seen enough cycles. Even me myself, I only, like, I think coming up to 4 or 5 years, I've not even seen a complete cycle, but I can go back and see, oh, what that cycle looks like, and then where
Mm.
the correction came and stuff like that. But those guys, they've seen so many cycles. They've seen super cycles. They've seen inflation, deflation, all those stuff. So you can only go and learn from them. Do not be intimidated, or like if you ask, the worst thing that someone can say is no.
Yeah.
And if you don't ask, like, then you'll never like know. So if someone asks you, hey, would you be open to educate me or be my mentor or whatever, it's going to say two things. Or no, I was going to say yes, but it's going to cost you X, Y, Z. And that's fine.
Rightfully so.
But we've got this
Rightfully so.
problem. Yeah, but I mean, we've got this problem where it's sort of everything is, not everything, but largely things are expected to be free. You see what I'm saying?
But I also say that if you do something really well, never give it away for free, because the other person will not appreciate it as much as when you charge for it.
The problem
there's a value attachment to it when you have to pay for it and actually earn it in some way or form. So that's where I see it.
Yeah, no, I mean, you can have an ebook and it's sitting on your computer and you never open it and you never study it, or because you got it for free. But if you're paying for a course at least, or you're paying for that guy's time, then it compels you to put in the effort. And that's where I believe the sort of the differentiation comes in. Do not, if he says, my consulting fee is this, think, oh, he just wants to make money off of him. No, he knows what his time is worth, and you need to be prepared to put in the equivalent monetary value for what he's giving you. Yeah, sure. If you feel you haven't like gotten the value out of it, by all means, bitch and moan about it. Whatever, go on Twitter, whatever you want to do, but just people going, I want this for free. You need to do this. I don't need to do anything.
No, you don't. That's the thing. You're not going to go to your lawyer, your doctor, your dentist and say, oh, by the way, I want a free treatment or consultation. Good luck with that, buddy.
Yeah,
why should we give it away for free? And I'm not saying that out of arrogance. It's just honesty.
And the thing is, like, even I get emails saying, oh, I want to take this position or this position. And I'm like, I'm very clear. I don't have a license. I can't give you financial information. But people would rather want the quick, like, answer here than, like, learn the fundamental building blocks and do it themselves. And you know what? That's fine. Let them do what they want, but there'll always be 1 in 10 or 1 in 100 or whatever that want to and pick up a skill and then do something else down the line. And then I'm sort of like, okay, cool. I'm glad I could have helped or steered him in a correct direction, or gave him the fundamental building blocks, at least, or the base, because you can't impart. So two things, you can't impart all your knowledge in like a week or two. It's impossible.
No way. It took you years to acquire it.
But that's the thing, is like, even if you bombard someone with so much, it's just like they either lose focus or they
interest. Even interest.
Yeah, I would say interest. Because it's just too much too much and too soon, and the time frame is too small. But yeah, so where was I? Oh yeah, the building blocks are very important, because even, okay, this is going to sound very weird when I say this, and it's going to sound egotistical, but that's not how I need to preface what I'm going to say. So I don't like teaching or educating someone that has had previous experience for a long time. Because bad habits are really hard to unlearn. It's unlearn the correct.
Oh yeah, those pathways have been laid.
And that's where it gets tricky, because you don't really want to turn someone away, or you don't want to, because the core fundamentals are of let's say technical resistance support, technical analysis, resistance support, trend, all those things, they've been around. There's just how you basically apply it. But now someone, then they will say, oh yeah, but what about this and what about that? And I'm like, oh, but why don't you do that then? And that's where you sort of sound mean, but why are you here? Or are you seeking like I think sometimes people seek validation more than they want to be taught.
Yeah, I think I understand exactly what you mean, though.
And
They
that's
just
where the
want you to
problem.
validate their opinions.
Yeah, they want to, and like, but no, you're wrong. And then the moment, then it becomes this thing about a competition between you and them, and it's really not. Like, listen, these
Oh
are the
my gosh, you've had that too. Yeah, I've had that. Oh, it's so irritating when that happens. It's like, why are you here? Honestly, you're wasting your time and my time by doing that.
I'm going to give you a couple of people to follow on LinkedIn.
Yeah, sure.
Okay,
always happy to.
so, and why I do this is because I believe as a community, we should be working together and not in silos or in
or against one another.
Yeah, why? What's up with that? Like, what? I mean, your common enemy, in quote unquote, is the market.
Yeah.
So we all have a common enemy. So now we are basically
collaborating, for lack of a better word.
No, but we're not.
Okay, maybe I had that wrong. So collaborating.
No, what I mean is like we are not. Sorry, but if you're trying to compete against me, and I'm trying to teach you something, and you're saying, yeah, but like, what about this and this and this?
Like, oh, sorry, I misinterpreted what you said. But I thought you meant as in, working together and actually helping one another to gain a better understanding. That's what I meant in terms of collaboration. Now, not necessarily trade together, but just like, okay, if you see this pattern, then there's a reasonable probability of X, Y, or Z happening. I'm not saying you should do this, but just be aware of that.
Yeah, that's it. And the thing is, there aren't a lot of people that are doing that.
Oh, but they're also scared. This is what.
Rocco, you're idiot. You're idiot. So you're getting scared. You're scared of being called out. But I'm like,
yeah.
And I honestly, I block and delete negative energy. I mean, I've especially on social media and on LinkedIn, I would post a chart and I would post why this happened, whatever, and then I'll get a salty comment down below, and I'll just and I'll just go block delete. I do not need negative energy in my life. So yeah, one of the guys.
Mark Twain. Just to add to your point, you know the guy called Mark Twain. Mark Twain always said, "Never argue with fools, because all they do is drag you down to their level and then beat you with experience." And that's exactly how I feel. It's like if you argue with certain people, you're literally wasting your time and your energy, and you're going to lose. You can't reason with unreasonable people. I've learned that the hard way. The very hard way, to my own detriment.
Yeah, but if you're close-minded because you try, and you can't, then it's much easier just to move on. So the one I've already mentioned, Simon Ree puts out incredible content. I mean, he does. Free, like really for free. The second one is Martijn Khalid. Martijn puts out incredible investment picks over a large, I would say, quarterly time frame.
Longer time frame. Gotcha.
Longer time frames, very, very good. And then the third one, which is Joseph Lackland.
Is he the guy who commented on our post yesterday? If I recall correctly.
Yes, it is.
He's good. He's good. I like his stuff too.
And he puts his levels are incredibly accurate, and he's sort of a
solid guy.
Solid guy. Solid. But also he doesn't need to put out that stuff. You know what I mean? It's like like why? But those are guys that I feel. That's why I like LinkedIn as a platform as opposed to Facebook, where Facebook is look at me.
Not even on Instagram.
Facebook. No, I deleted my You know what? I deleted my Facebook account, and it's the best thing I've ever did.
Oh, I'm sure. I use Instagram. I call Instagram my vanity account. I just post some books that I read, or some fitness stuff that I do. I'm big into my training and all that stuff. So I just use that to show people, like, look, this is cool stuff that I've been trying. If you want to learn more, but I know what it is for. I don't consider that to be a valid social media account where I can literally learn anything useful.
What do you think about Twitter?
Twitter is useful as a news feed, as far as I'm concerned, and also to look at what not to do more often than not. It's a wonderful reverse. It's a wonderful reverse indicator in terms of some people. And I mean, I know a guy, Chris Cyril, that I told you about. He's a Twitter master. I mean, he's amassed pretty much 20,000 followers and all that in a very short space of time. So I watch what he does, but he posts useful stuff. Another good friend of mine is a guy called David Bell from Macrodesiac. And he's also got incredibly good material. And I've interviewed him. He's actually interviewed me once on his podcast, and I interviewed him twice on mine. Such a good guy, though. I mean, some people find him a bit arrogant because of his very candid views. I just love him. He's just such a fantastic guy, because I'm like, yes, one of the few straightforward, honest voices in this world where people are where everyone is trying not to be offensive or not to be this. I just say, F that. Speak your damn mind. Just don't be afraid to actually have a view. It's like what Winston Churchill said when someone asked him about enemies. He said, "Oh, you've made a few enemies in your life. Good. It means you actually stood for something." I was like, yes, go Winston.
if people aren't talking about you doing something wrong.
Absolutely.
But I think it's largely the company you keep, and you allow, one of the subjects that we haven't really touched on is the new impact of the news, or the influence of news on trading and investing. Because sometimes you need to cut that out. Like, honestly, it can be so harrowing for you as a trader, because if the news breaks late,
mostly noise.
News is noise, and then you find people purely trying to trade the news and sentiment and stuff like that, and it's like, but
there's one thing that I find useful regarding news, just one that I've ever come across, and that's called the SOC theory. Have you heard of this one?
Doesn't ring a bell, but
scene of the crime. So SOC. Essentially, that where the last price point before the news broke is often a point that the market likes to retrace. Not always, depending on what the news
is.
A
probability.
But it likes to retrace it. But it likes to retrace it, almost similar to a criminal who revisits the scene of the crime. That's about the only thing that I really find useful about trading the news. As for the rest, it's just chaos. Look at what happened 2 weeks ago when Biden made the announcement that he wants to raise capital gains tax to 40% or 41, or whatever the hell it was. That caused absolute freaking chaos in the market.
And the next moment, we were back to normal.
And the next day, it did a scene of the crime retracement reversal. So am I saying, by the way, disclaimer, am I saying that always happens? No, of course I'm not saying that always happens.
Not financial advice.
It's not financial advice. Please, for heaven's sake, don't quote me on this. We'll say that.
You know what I miss? I miss Trump's tweets.
Sometimes I do, sometimes I don't.
Because that man could move the market at the push of a button. And that was some serious movement. I would say the only person that's coming close is Elon. With Elon. But I mean, Elon pretty much only tweets about crypto. So
yeah, true. Or Doge. Because I think he's involved in that now.
Yeah, but I mean, it's
insider trading galore, but I don't know how the SEC would pin it on him.
South Africa's biggest export. I mean, it's I don't know. It's a very polarizing figure, but for me, Adrian, he is, as a South African, at least something to aspire to. Does that make sense when I say that?
Yeah, it makes perfect sense.
Because you
I
might,
personally, yeah, I personally view Elon Musk in a bit of a neutral kind of way. I value the fact that I don't know if he is technically a genius or not. That's a little bit hard to say. Very smart guy. Let's just call him very smart guy, not the Trump kind of very. I'm a very smart guy. You know,
very good Trump impression, by the way.
thank you very much. You know, but no, seriously, I don't consider I don't consider him very smart in the Trump kind of way.
Yeah.
I consider he's a really really smart guy. Um, do I think he's right on everything, and will I just follow everything he says? No, of course not. I don't do that with anyone. You know, no one is
Mm.
worthy of that. You still need to be objective and evaluate the content and the context in which something is said. Geez, how many people do that nowadays? It's all
No,
about the
they don't.
content. It's all about content, but no one looks at the context. It's no wonder everyone gets so offended about the tiniest of
Yeah,
things and have become emotional hemophiliacs,
yeah,
as
but that's the
one of my
thing.
favorite guys call them.
But that's the thing.
So,
It's that these guys are elevated to cult status. And I say,
literally,
guys, yeah, I
literally,
mean, yeah, I mean,
yeah,
literally. So,
yeah.
and then everything is either right or everything is either wrong. And there's all, we lose all objectivity in everything. I actually, up until a couple of months ago, I think he's playing a brilliant game. I think really it's a game that he's playing. Um, and kudos to him. I mean, like, would I be able to amass that amount of money in my lifetime? Probably not. But kudos to him.
Most
Who am
people
I?
wouldn't. He's a
No, so
massive
who am
outlier.
yeah, but I mean, so who am I to say, yeah, you are this or you are that? I
He
mean,
doesn't care. No one
he doesn't.
cares.
But that's the thing, is he doesn't care what, because and I spoke about this with someone yesterday. Um, we said the rise of influencers again. It's funny that it's coming up again, but you have these guys, Gary V and Tony
Mm,
Robbins. Okay, but Tony is a bit of a goat, but he's been around there. But what I mean is, these guys are coming in as cults, and they have
kind of, yeah.
massive followings, and sort of they are playing the platform. I'm sorry, they are playing stadiums, right? Wembley, whatever. And then you've got us guys down here playing sort of a gig at the bar, hoping to get a record deal. That's
Literally,
that's
literally.
literally how.
Absolutely. And even Trump, who's a highly controversial figure, I mean, I don't like the man's personality, but you've got to give it to him that he knows how to rally a crowd. You've also, and I'll challenge anyone who wants to take me on this topic. I mean, you better know what you're talking about, by the way, before you do. But but the reality is that he didn't do everything wrong the way that he's portrayed as such. No way. There is no way that anyone can tell me that Trump was one big mistake for the US in every single way. There are things that he did correctly too. And, you know,
I think it can.
and anyone who says that
Mm.
he just did everything wrong, you're an idiot, and you're as big a bigot as what you claim him to be. That's the ironic aspect of this.
Yeah, I think we're losing objectivity.
Superbly so, because it's all about bloody feelings nowadays. And I remember one of the things that you said, I believe it was to Simon, that you said on your podcast, is you don't care what someone's belief system is. It's
Yeah,
whether or not their belief system is in alignment with what's happening or what's not happening. It's literally as simple as that. And if we had to go purely on feelings, you know, how we feel about someone or something, we're going to get it wrong most of the time, because our personalities don't necessarily correlate or align with what we are viewing. And that's where objectivity has to come into play if you want to have, no pun intended, an objective view. Otherwise, you're just being subjective. And where does that get you half the time? Not very far.
no, well, in trading, it will get you anyway.
Exactly. That's the thing. And that's why I think what you said is so correct, that trading is one of those professions that will really show you who you are. because it's very easy to have an opinion with no skin in the game. Let's put some real money on the line and see how tough you are then. Let's see how you don't become emotional. I also am in alignment with what you said, that this whole notion where you should not become emotional. Well, I would say it's almost impossible not to become emotional when your livelihood is on the line. But for heaven's sake, try not to become frantic. If you become frantic, that is where you really start to do stupid things. Emotions can guide you in a very positive way too. It just depends on how you manage it. And I think it was brilliant what you said, that the amount of risk that you take on any given trade will determine how frantic you become at any given point. If it's too much, you lean towards the frantic side, and if it's just enough, you'll have a balanced emotional profile more often than not.
Well, I can't agree with myself any more than I already do, but I mean, it's
no,
it's not like it's. I feel at this point, there's a lot of people putting stuff out there that's based on predictions, and then, yeah, I was right, see, 2-3 weeks ago. But it's not about that. It's about putting content out there that people can actually find value in, right? Because
absolutely.
actionable value is your personal brand.
Yeah.
And building a personal brand is so important as to, okay, but who is Adrian? Who is Rocco? What do they stand
Yeah.
for? It's much more important than saying, oh, but I make this prediction. You know what predictions get you? Eating hats. Like that's basically like, or getting pie in your face.
Love
I
that
mean,
one. I love that one. Yeah.
yeah.
Predictions lead to you eating hats, because it's so true, because I can't think of anyone who has never had to eat their own hat at some point, given due to false or erroneous predictions.
No, well, I mean, the problem is that if it's a probability, then you're always, there's a 20, like I said, 25% probability that you're going to be wrong, and that's fine. I said failure doesn't need to be normalized or celebrated, but at least we need to say, you know what, it is what it is.
Yeah, I I love this concept in learning called ligometry. Are you familiar with it?
No, no,
Before I
never heard
delve
of
into.
it. No.
So ligometry is essentially the process of quantifying the things you don't know, or knowing what you don't know. So one of the best ways to describe it is, if you imagine a circle, and within the circle is all the knowledge that you have on a particular topic or on life or whatever, then and everything outside of it is everything that you don't know, then ligometry is the edge of the circle. So that is constantly, that is a process of constantly pushing the boundaries of what you don't know, and being aware and comfortable with what you don't know. And I've said to people many times before, when they ask me, how do I make decisions and stuff, I said, I make decisions based on the best guesses, essentially, not just flipping the coin. That's not what I mean by best guess. I'm talking about looking at the probabilities, looking at patterns, looking at the fundamentals, because we got to remember that the macro drives the technical does not drive the macro. And that's also a really key thing to always remember, is that for the most part, it's the one way that drives the other. But that aside, don't rely on one tool, because it's just a tool in a toolkit. So for God's sake, if you think that you're going to build a house with using just a hammer, you've got another thing coming.
Yeah.
Sorry, go ahead, Rocco.
No, you can go ahead.
So if you think that you're just going to use a hammer to build a home, how can you even reconcile that? You wouldn't do that, right? So why do you say, oh, if I've got this indicator, or if I've got this software, I'm a genius? No, nothing can do that for you. It can sharpen your edge, but it can't give you an edge. The only edge that can be given to you is insider bloody trading. And let's see how well that works out for you until you get caught. You know, so
Yeah,
that
so
literally is the only edge.
no, it is. I mean, you'll get people looking at one time frame and one indicator and making choices, and it's. I mean, far be it for me to say it's incorrect, but I
No, no,
believe you need.
absolutely
I
not.
need you. I need. I believe. Sorry, that you need confluence of time frames, at least three that are going in the same direction for strong movement.
Yeah, especially for longer frames. Yeah,
And I mean,
absolutely.
I believe that because that's how I was taught. So that was how what was passed down to me. It didn't like come up with it in thin air.
No.
But people don't realize it's. I, I'm not sure in how long or the time frame, but there hasn't been any new discovery or radical way
Mm-mm.
of doing it better, whatever. And not well. I mean, okay, you must help me
Probably a
because I
hundred,
think
probably a
yeah.
hundred years. The
So
methods have
so
changed. The methods have changed, Rocco, but
yeah
the ideas have remained very the same. You know, when I say
yeah.
methods, I
So
mean instead of being on a pit floor, we had not had electronics. We would have been on some pit floor in Chicago or New York or wherever. You know,
yes,
but so that's the only thing that has really changed
that's
is that the electronic trading has leveled the playing field for entry, but it hasn't made it any easier. In fact, I would say it's made it unbiased to a large extent because the market doesn't give a damn about who you are. So
no
whenever I
exactly
hear saying,
no.
so
Well,
whenever
yeah,
I hear sayings that, oh, the market's against me, oh, please, you bless. You think the market cares about you. You think
market
the
doesn't
market even
care.
knows you exist. You think it
No,
even knows you exist, mate, with your paltry one or two contracts. Please.
no, the
How
market. Yeah,
self-important are you?
I've seen pictures of pits in Chicago, and that looks like an absolute riot. Damn, I wish I
Yeah,
don't know. I think that would have been epic. Um, Saying that, maybe much prefer where we are now
I
and
prefer
not
this.
that how instant it is, but I'm just saying it that looks like. And you see people talking about or like referring with fondness about those days as being sort of the glory days. But I mean, that's what they knew.
Everyone does that. Everyone does that.
Yeah. So high frequency trading has changed the game so much. I don't know if you saw Buffett's comments, or it was not only Buffett, it's Munger as well, where they said that they commented on Robinhood, they commented on crypto, and it was actually there was a strong coming out statement. It wasn't like a passing statement or whatever on day trading or speculating or whatever. It was a
Hmm.
strongly worded statement. And I actually think it makes their job harder.
Okay. In what sense? I want to hear your perspective as to why you think
So
it makes their job.
I think it makes their capital allocation harder if markets move with greater volatility. That's I might be wrong, but that's just my opinion. If
Probably
market
does. I mean, it makes sense. I see your point. Yeah.
so if because I mean I've spoken to people that been trading for 10 years, 15 years, 20 years, 25 years. And all I have is what they've told me is it never used to be like this. We had things like trend and markets moved for a long time in a certain direction, etc., etc. Where I
Mm.
get the feeling now, it's with high frequency trading. I mean, we could be up, Dow can be up 200 points at one stage in a day, and we could be down 300 points
Yeah. I hear
in the
where they're
same
coming
session.
from. I hear where they're coming from, but
So,
let's also have a bit of perspective over here of where the Dow was, where
no, I
relative
completely
to
agree. I'm
to where
just
they
saying,
were.
my point is, I don't think he's saying, like, yeah, we need to protect people from ourselves. I just thinking it's making their capital allocation more difficult. Because
Probably is.
otherwise,
Mm.
what would his okay? So what would Buffett's rationale be for coming out and speaking against um, Robinhood and day trading and people managing their own money? What would he stand to gain out of it.
Not much, because people who trade with him can't afford to invest with him, so I mean,
I mean, if you look at
no way.
no, but that's my point, is look at these assets under management, look at these AUM, it's staggering.
Yeah, it's
So
hundreds of billions, isn't it?
yeah, no, I mean, I'm not, but it's, I mean, there's another profitable quarter. So sold most of it, which was interesting. That they're actually sitting on a large cash, so it's showing that they might
They want to buy back stock now.
Yeah. So my point was just like, it's an interesting way for them to come out against, I mean, something that's my life, a part of my livelihood, and saying, but I don't even have the money to like allocate to you so that you can do it for me. So it was just a funny comment to make, and I just thought that what does he have to gain? And then my mind started to wander as to, but maybe high frequency trading is making their lives a bit difficult.
But you know what? On the other hand, it shouldn't really, because the time frames that high frequency guys use are so short that it doesn't. All it does, as far as I'm really aware, is create a lot more liquidity. I mean, look at Citadel. I think Citadel is your single biggest liquidity provider in the US. And I'm speaking on a correction here, by the way, anyone who knows who the actual one is, or if there is a bigger one, please correct me. But I saw something on CNN a few years ago where Citadel would literally wait for the market to open, and 32 million shares had traded via them within the first 2 minutes. 2 minutes.
Yep.
I mean, are you freaking joking? It's just mind-boggling to see how big those guys are.
Yep. Trading market open is not for sissies.
No. I've got to bust it up a few times doing that. That's why I wait a little while personally.
So there's two things. That's something that just came across my mind is, and that's the awesome nature of having these conversations where I would have an opinion and then you would say something. It could be that Buffett is also could be that he is genuine in his response, and that they do see a downturn coming, and then people only know a bull market. They are conditioned to buy the dip and conditioned to buy more, and they actually see, well, the real problem coming.
Maybe they do. I just think with quantitative easing and the incredible amount of liquidity that we have in the market, that is going to be very hard to call unless there's a serious catalyst. I mean, even the whole inflation narrative is only half understood or being half presented, as opposed to presenting the full picture. It's like I was having this chat with my friend David Bell from Macrodesiac, and he also said, and he also explained it beautifully, that velocity of money has a far bigger influence on inflation than supply of money, or rather, money velocity versus money supply. Sorry, I just wanted to use the correct terminology, because people often misconstrue the fact that greater money supply means a greater devaluation per unit of said money, and that's not necessarily the case. Because look at the dollar. The dollar has got squillions, for lack of a better word, in supply, but the value doesn't necessarily decrease. Why? Because of the incredible demand for it. And a lot of the money that has been printed, because this is also another favorite one that I keep hearing, 20% of all dollars that are in existence were printed last year. So what? Most of those dollars that were printed were used to buy bonds, whether junk bonds or 10-year treasuries or those things.
That's where the fake narrative comes from.
Yeah, so the whole idea that all of a sudden, because more of them were printed, 20% of all of them were printed in such a short time frame. This was also an exceptional crisis. The world economy had not slowed down to that rate, I think, arguably since 1929. And I think this was an even bigger crisis. It was actually an even bigger crisis, relatively speaking, than that, because world trade stopped. Let's consider that the world trade literally went poof halted.
Yeah.
I don't think even during the Spanish flu and the Great Depression did that actually happen. So you can't say that, oh, well, because 20% of them were printed and therefore we're automatically going to have inflation, that's just the case. It sounds correct, but it isn't correct. And that's where people get caught up. Just because something sounds correct doesn't make it correct. Was Einstein loved, and as Einstein always loved to say, what is correct is not always popular, and what is popular is not always correct. Jeez, that's also one of my absolute favorites that I keep reminding myself of. So I think you need to have a decent enough understanding of how these things work. But if you don't understand everything about it, then that's also perfectly okay. I don't think anyone really does, to be quite frank.
No. So I mean, I'll tell you what I subscribe to, or the theory that I've subscribed to, or what I'm looking out for. I'm not by no means the only person saying it, but by the time the Fed raises interest rates, it's going to be too late.
Probably, yeah.
People are too focused on interest rates, so that's going to be too late. With the amount of leveraged capital in the market, you should really just look out for any signs of tapering supply and liquidity supply. And
absolutely,
it's better to start thinking about sitting on cash earlier than missing out on a perceived continuation of a bull run. Because look, this that recent 10%, I think it was 10% NQ correction a while ago. That was nothing.
yeah. That was a minor volatility move.
That's
very
nothing.
minor.
That's nothing.
Very minor.
I remember
move. But look at the effect.
Yeah, but I mean, I remember sitting with COVID, and you thought, "If me, there's something going on. This is big. This is like." This is like doomsday stuff because it just went.
And but I mean, Rocco, to build onto your point, the NDX, which is the volatility, it's the NVX, I believe it was, which is the volatility index for the Nasdaq, barely even hit 35, if I recall correctly. I mean, during COVID, it went 80 or something ridiculous like that, if not higher. So 35 is still it's high, but it's nothing serious. It's like surfing 4-foot waves or 5-foot waves, something like that.
I mean, it's drifting. It's not serious, but the way this market is moving, it's setting itself up more for a flash, I think, in my personal opinion, than a slow and steady movement. And I think it's going to catch people unawares because it's going to be, well, Fed's going to save us. Look, is it going to come back? Most probably. How is it going to come back? Is it going to be central bank digital currency? Is it going to be something else? I don't for a moment believe that it's going to. Okay, so I'm going to get obviously shot down for this, but I don't for a moment believe that Bitcoin is going to become the new currency standard.
No. Okay. Most people who trade Bitcoin don't even believe that it will. And my brother is a crypto trader himself, and he's amassed quite a bit of money, and he knows quite a few people in the field. And he said most Bitcoin traders are not ideologists; they are trading it because they can make money from it. But they don't believe that the US dollar is going to be replaced. So I'm with you on that one.
If people selling NFTs, what's the first thing that they do is they put the
convert it into dollars.
Ethereum into dollars. Why?
Mm-hmm.
If you believe so strongly in something, why would you do that? I believe in the underlying technology of blockchain, which Ethereum built on, and those. But as a currency, I mean, look,
it's too volatile to be a currency.
Well, the problem is that fiat has off ramps and on ramps, and crypto hasn't built those off and on ramps. And basically, your central banks and your countries can just tax crypto to death. I don't think they will like outright ban it and just take away the on and off ramps and now you can't take it to USD or you can't like convert or whatever. They'll just tax it to death. And let it like wither away, whatever. But the thing is to all good things come to an end. Yes.
Of course they do. Tulip mania. Tulip
It's
mania, prime
no,
example.
but reserve currencies come and go, right? If you look and look at
Yeah.
something like 90 to 120 years reserve currency stay, we're entering like I think it's 90 years or 90 something years of USD reserve currency. No, it's not going to be there forever. But if you think
Can't be.
but if you think the governments of the world will allow a decentralized currency to come in and
Mm-mm.
like take reserve currency
No.
status, you must be smoking
Mm-mm.
something.
Oh, absolutely. I mean, it just makes sense. And you rightfully just pointed out that, I think the pound was the world reserve currency up until 1920s or late 1920s, something like that. Um, and then the US dollar obviously took over as it became the dominant economy, especially after World War II. World War II was like a catalyst for the US superpower status to be accelerated. So obviously that's what just accelerated it like there was no tomorrow. But will it always be the dominant currency? No, probably not.
No, if
Um,
you look at
I,
history, then it won't. But I think the central banks are already experimenting with digital currency. I think it's
yeah,
coming. I
yeah,
think
yeah, yeah.
um,
Well, most
I think
money is
it's
digital anyway, if we really think about it, or as it is.
Yeah, I'd like to say cash is king because always feel depending on where you are, especially if you're up in Africa, where we are in South Africa, you can get a lot more done if you got cash with you or cash
Oh
on you,
yes,
if you know
oh
what I
yeah.
mean.
But in
Um,
places like Scandinavia,
yeah, but I
they,
mean,
they don't even have cash anymore
so money
for the
is,
most part.
yeah,
Yeah,
no, I know what you mean. So money, in a sense, is fit for purpose. It's what is the purpose?
absolutely.
What do I want to accomplish? And in what denomination do I need it? Do I need it in cash? Do I need it electronically? Whatever. But I mean, if you go and look at the changes post Spanish flu. I think you said 1929. I think that sounds
Yeah,
right.
yeah. Yeah, I think the Spanish flu was 1917 or 1918. It was one of the two.
Yeah, but close enough. But I mean, like post like a decade or whatever,
Yeah,
just
yeah.
after it, because it doesn't happen overnight. It happens
No, no, no,
over a
absolutely.
period. Yeah. So
Mm,
we didn't have passports. The world didn't know passports as we know passports
mm.
today,
No,
right?
far from it.
So if you look at where we are now with COVID, it's a similar event that we are going through. So go and look at all the things that change and how they change it and how they made people, uh, how can I say, used to it. And then it's not a conspiracy theory.
No, it's
I'm
far
saying
from it.
go. No, I'm saying go and look at history. That's the other
Yeah,
thing that charts can teach you is go back in history and see what certain patterns and certain things look like. So go and look at what happened like in the decades post, because there's opportunity there. And know what there's a probability that life is going to be like that, because we're already speaking about something that they're calling a COVID passport or a
yeah.
vaccination passport
Hmm.
to get around. That's a step. That's a step further than a normal passport.
Normal passport, yeah. But
Because
COVID
what?
was also, yeah, but COVID, as you rightfully just alluded to, was not only a catalytic event, but it was also a cataclysmic event for certain industries.
Correct.
Certain industries just got absolutely decimated by COVID, and other industries thrived under COVID. So that's why I'm saying it was cataclysmic and
Mm.
catalytic, given the fact that more people now work from home. It was already a trend that was beginning to take
Emerge.
shape, and now COVID just boom hyperbolically accelerated it. But the cataclysmic part, as I mentioned, is where other industries just got wiped out overnight. So we are constantly experiencing rebirth and extinction events without people necessarily dying to experience those kind of events, because the world of business is essentially a man-made form of nature, if you really
Mm-hmm.
think about it.
Mm-hmm. Makes sense.
So uh, so um, you, so what does nature do? The strongest, most adaptable species tend to survive, and the least adaptable and the weakest tend to expire. look at your Kodaks, look at your Blockbusters, all those kind of things. It's just a form of nature. Markets are no different. Countries are no different. People are no different. Sorry, I went a little bit on, but
no,
you
it's
get the
fine.
picture.
But I mean, I get the no. But the thing is, what I wanted to say is, what I wanted to add is, you talked about adaptability, and it's not like people didn't have the chance, or they didn't have the opportunity to go into e-commerce or to pivot into e-commerce. They just rejected full IR, and then basically this event like made the choice for them. And so I always say that you always need to look at innovation and look at where you're going, and keep an open mind. It's because
Absolutely.
it's very easy or easily that that decision will be made for you. And then you would have had time to make it yourself, but then it's a race against time to see, can I basically do this fast enough? Can I innovate fast enough? And you can't innovate. Like, yeah, time is a great, the constraint of time is a great innovator, or great motivation
or
for innovation.
necessity.
Or necessity,
Necessity.
is a mother of invention. But it's, I mean, it's much easier when you have the time at least to prepare and you know what you're going to do.
Absolutely. No, 100%. And also, I think if this has taught us anything, is to avoid being levered to the hilt during great times, because things can change so quickly. And then you might find yourself being left at the side of the road before you even know it. So it just shows you.
Diversification is something that I hope and wish that they would teach in school. There is a brilliant, no, I say brilliant, and then I forget his name. It's a mental block. Justin Welch on LinkedIn is a brilliant person to follow on LinkedIn, where he speaks about the benefits of diversified income and multiple income streams, and how to achieve it. Like, content generation is the new of the new kings. If you look at the rise of content generators, and we are so used to, oh, you do this one thing, and then that's why I said way back in the start, don't label me as one thing. Don't label me as a trader. Don't label me as an investor. Don't label me as, because you can't.
You're multidimensional.
You can't rely on one thing. If you look at the people who are successful in life, they've all got a lot of stuff going on. And it's because they have been lucky enough, to surround themselves with people who they could have seen, oh, so that guy is doing that, okay, that guy is doing that, oh, okay, so it's not just one thing, and I need to look at this and this and this. And I mean, we are like, I mean, I refuse to believe that you don't have one skill, or like someone doesn't have one skill in life. There's nothing worse to me than someone coming to me and saying, I want to do this, but I don't know how. I'm not talking about trading. I'm talking about anything general. Have you heard about YouTube? Have you heard about Google? There's always someone with a Google channel, with a YouTube channel that you can go and say, oh, okay, so that's how I do it. Okay, cool. We are living in the information age, and we've never been more, detached from information. But it's literally at your finger. It's literally at your fingertips.
We're drowning in information, yet starving for wisdom.
Yeah,
that's one of the best things that I've learned or heard before. Is that it's literally a case of that.
So follow the right people, and make sure you diversify your income streams, and make sure you educate yourself, that you're not in a position when everything turns, that you're so reliant on one thing or one person, or like whatever the case may be, that you're hedging everything on, like a nice trading metaphor, that you're hedging everything on the outcome of one trade.
I fully agree with you. I mean, Rocco, this is a topic that we could literally carry on talking about all day. I mean, I would love to continue this conversation with you again on another podcast, because I mean, heck, you're such an interesting guy. I mean, I just the conversation just flows. You've got so much knowledge to share, and you're just a likable person to talk to. So, I mean, I really appreciate the time that you've taken to, to talk to me and share your views. It's been an absolute pleasure having you on.
No, it's been an absolute pleasure being on here as well. It's the beauty of modern technology is that we have this, for not a lot of money, we are able to put our thoughts and ideas across and really build on who we are, because I've learned stuff through this conversation. Now people have learned a bit about me, and they can go and check us both out. But it's about, if you're not doing it, then really you're doing yourself a disservice. If you're not putting your thoughts and ideas and stuff out there, yes, not everyone's going to agree with you, but hey, who cares?
Yeah, but
Go
no
out.
one's ever going to anyway. So get used to it.
Get
used to it.
You need to have a very thick skin.
One of the best things that I learned about podcasting, before we sign off, is that it's taught me to, I kid you not, literally get over myself. It's one of the best things that it did for me. And as crazy as this might seem, it taught me to get used to hearing the sound of my own voice, especially when played back to me. I cannot tell you how badly that used to throw me off, where I'd be like, oh, freaking hell, is that what I sound like? Terrible. I can't believe, no. And then I'm like, oh, come on.
But
That's
there you
just
go.
what you sound like to other people, so get over yourself, Adrian. I mean, you really.
There you go. That's a skill that you picked up. Your cadence is probably, if you go from this episode back to the first, your cadence is probably better. Your tone is better. You're speaking with better emotional intelligence. Helped you. Yeah, but that's it. So, I mean, that's a way of improving yourself through content generation. And that's what people don't understand, because they're looking for the quick fix and everything needs to be instant. And the more we drive into this instant movement or instant gratification, the more important the delayed gratification becomes, and also teaching our children about it.
No, absolutely, Rocco, and that's why I would definitely like to have you on again for another episode, because there's just so much more that we can delve into, and it doesn't even need to be about trading. We can even talk about podcasting and all these other things, because
that's awesome.
That's why I created this podcast in the first place, the Black Heart Red Spade, to spot treasures that are in front of you that you can't see because you've been conditioned not to see them. So the whole reason why I have these conversations is to uncondition not only myself, but people who listen to this, to see things that are literally right there, but you just need to learn how to see them.
Someone needs to point it out for you. I always say, when I teach someone, say, oh, that's easy. It's like, yeah, it's easy because I pointed it out to you.
Yeah, literally that. Rocco, have a great day. As I said, thanks once again. I hope your trading today is going to go incredibly well. May the fourth be with us, as good old Yoda would say. So let's go Skywalker the absolute daylights out of this trading day. And once again, thanks for your time, my friend. It's been an absolute pleasure.
Thanks, Adrian. Cheers, and thank you for your listeners for having me.
Thanks a lot, Rocco. Have a wonderful day. Cheers, my friend.